So one thing I've found from my experience so far in these markets is that as a beginner, you're so inclined to take multiple trades throughout a day. And that stems from you just not being disciplined or not being properly understanding of what it means to treat trading like a business. That being having certain operating times that you're an active market participant. Now, it begs the question, what is it that you should have these active times to be a participant? What is it that they should have certain times they should be operating within? Because it lends to protection, protecting you from yourself more often than not. Not really protecting you from the market, but protecting you from yourself. Because you know for certain when it gets to a certain stage where you say, you know what, let me just go off a rail and spend spend 10, 12, 15 hours on the charts. So much that you're just leaving yourself vulnerable and overexposed. And in them cases, trust you don't want it to happen, or you don't want it to be like that. So my recommendation is simple. Have specific operating times, certain trading periods, a specific time period, time slot, whatever you want to call it, that you actively participate in the market, where you're actively awaiting your model to present that would warrant a valid entry, for instance. And if we just had to get into understanding or a practical example, take mine for instance. I trade or I set my hours at 8 until 12. When I say set my hours, I mean I'm an active participant in the markets in Dow Jones Average Industrial at between 8 a.m. and 12 p.m. Why 8 a.m. and 12 p.m.? Because I want to take advantage of the volume. I want to take advantage of my understanding of volume, so to speak, where I operate under the understanding that, you know what, from like 9:30 a.m. EST, that's when the New York Stock Exchange opens. And oftentimes I realize there's an influx in volume as New York Stock Exchange opens. So my intention is to play in accordance with that influx in volume, so much that I could take the most optimal opportunities within the trading day. What I mean by this, trading when the volume is actually there, as opposed to me trading Dow Jones between this period where it's like rollover. So like say for instance at like 5 p.m. when market closes throughout, say for example, the Asian session, right up to London to a certain extent and pre-New York, pre 8 a.m. I don't want to be trading within this type of price, to be honest. Why not? Because it's asinine. It's not really the most optimal thing to do from experience. From experience. So my recommendation, have set hours that you intend to be a market participant. Set hours and use these set hours or set these hours based on market volume, based on when you know for certain the pair is going to move. And how do you know for certain the pair is going to move or has volume within, say for example, your desired time period? Just go back in price and look at when the moves actually happening. When is it that we see these big impulsive candles? These candles are going up, up, up. When is it that it's happening? You will find commonality where that's concerned, so much that you realize that, wait, it happens within a certain time period, so why not take advantage of this newfound understanding, or this already established understanding, for instance, instead of playing, for example, when volume is beginning to die down, nothing is really happening, and you left yourself more or less waiting for nothing to happen. So all of this, like a whole lot of nothing is happening, but you're just waiting for nothing to happen because of your lack of discipline and your lack of understanding that once price is once the conditions are subpar, ridiculous for me to trade in, I should not be looking at price, or I should not be looking at a chart. What I should be doing is reviewing my performances, reviewing my data, and trying to become a better trader overall. And those instances when, say for example, after 12, and say for example you trade an hourly chart or a quarter hourly chart, a 15-minute chart, you get an instance where, wait, I know for certain by time 12 p.m, 1 p.m, or barely heading into like the afternoon session, that's just after like 12 p.m, 1 p.m. and it's like, wait, volume's starting to die out, and they don't really want to be sat at charts anymore because one, my mental capital is at stake, and two, well, trading capital is at stake as well. And the mere fact that I leave myself exposed or overexposed to being haunted or being hunted by these markets, for example. You're being hunted by yourself because in actuality, that is what it really is. At the end of the day is you against you, and you against the rules that you set in place, and you against your understanding of discipline, you against you against your morals, you against your ethics, you against your values, you against how high you hold yourself as a person, as a trader. It's interesting. It's interesting. But if I go back to why it is that I play towards, say for example, 8 and 12, taking advantage of market volume, taking advantage of me understanding how I intend to be as a trader in regards to being professional and proficient, and just keeping calm throughout, to be honest. And what's interesting as well, just because you set time, say for example 8 and 12, it doesn't mean that you have to be, say for example, sat at a chart between 8 and 12. It doesn't mean you have to be stuck in one position in that time. What it could mean, or what it could elucidate or insinuate to a certain extent, is that you would have the autonomy to do as you please between 8 and 12 if it means following your system, or if it means being patient. And from my understanding, patience is what happens in between actuality, or what's happening currently, and what you intend to happen, or what is it that you're waiting for. Say for example, you're waiting for price to mitigate this area from between 8 a.m. and 12 p.m. Patience is me saying, look, I'm looking for price to mitigate these price, or I'm looking for the US 30 to mitigate, what is this, 42,544.66. And what I'm thinking about doing is just keeping steady within this time. And what do we do to keep steady within this time? Well, for one, I will set an alert so I know, for example, wait, price is nearing this area, and I check and see, is it between 8 a.m. and 12 p.m. If so, then it's all good to go in regards to me executing the system, executing the model. But if it's a situation where it isn't between the same time period, then I simply don't care. I simply don't care, and that's more or less the attitude that I don't want to see you have to adopt, but try adopting it and see where it takes your trading. Where the moment prices are playing congruent with what you intend to happen, or what you would love to happen based on your data and based on you having an established model, then just leave it as is. Do something else. Be patient during that time. Be patient just doing something else, but you're waiting for one instance to happen. So you're waiting for a mitigation to happen between 8 and 12. Me being patient, say for example, complete other admin tasks that I have. I don't really want to talk too much on that, but complete are building other businesses, or in the process of building other businesses, doing something else rather than more or less self-sabotaging. And that's something that I learned the hard way. That's something I learned the hard way indeed. But yeah, it's like if I just go back a bit, 8 and 12 time I looking to play Dow in, all I'm waiting for is me doing my analysis, me understanding where I'm waiting for either A or B to happen. If it happens within this time zone, I execute. I press the button. If it doesn't, so be it. I press this S button at the top. It's calm as ever. It is as calm as ever. It is as calm as ever. But it then also begs the question though. Let me see if I can find the exact example. But it then also begs the question, what then happens when you get a situation where, let me see what's going on there. What then happens when you get a situation where prices, say for example, you got a range set up, so ranges again, high, low, verificators, and we get a mitigation within the time. It means now that, yeah, I got an entry. This is a 4% trade, way too calm. We do the same thing again, range high, range low, waiting for price to mitigate the range within the specific time, and we just take it as it is. Take it as it is. If it's one thing I could say, is just take it as it is. Take your rules as they are. Take your rules as they are. But let me see if I can find this example or this specific instance. Whereas, like, say for example, yeah, let me just zoom in on this a bit. Say for example, we get this situation happening where I could like say this is a range to play along from, and they're waiting for the mitigation to happen within the time period 8 to 12. What then happens when price goes beyond 8 to 12 or go beyond 12 or 1 in these instances, as I have an extension to the rule? What then happens when the mitigation happens after the cutoff period? Well, for one, it's save you from potential exposure or save you from exposure in general. Where say for instance, had I say for example going on and set up my limits, as this is a range to play from, and I just take the 80% of the range as it is to target the highs, stop loss covering the lows. What then happens when it's like I get involved in this position after my time, but you can see instead of price actually running to targets, we get a complete meltdown. So it's like saving yourself from -1, saving yourself from being exposed in the market is due to having rules or due to having specific operating times. And if there's one thing that I would like to have, or one idea that I would like to have relayed in this video, respect yourself, respect your rules, respect them systems and processes that were set up to aid in the optimization of your trading. And if you don't have systems and processes set up that would allow you to perform better as a trader, look into it. All I could do is offer help in regards to you looking into it and you developing your own. That's all I could do. Through these videos, through the mentorship program, you name it. You name it. Just respect yourself, understand what rules are, play in accordance to those rules. Say for example, you get an instance where, yeah, I probably address this in another video about rules, but this wouldn't be a valid range to play from based on my understanding of price delivery. But say for example, you get mitigation happening. I mean, this one was interesting because it happened within 12. But say for example, it was just outside the 12 at 2. And we get in, regardless of our rules, where your rules state, you know what, as long as 12 happen or 1 happen and we don't get entry, leave the trade as it is. Press this red button at the top. Imagine if we just gotten into this position and suffered the same fee as last time. There's like, yeah, it ran, but it doesn't mean that it will say, for example, run to your targets. You can call it a day. Obviously, this can happen as well with valid trades or trades that were entered within the valid time period. But it goes to show that, you know what, more often than not, if when I respect my rules, I get results. And it's just a matter of you understanding this so much that you could go ahead and apply it on your own, or apply it to your own trading. For instance, set up a time in which you intend to be an active market participant. Once the time elapses, click the S button. Don't bother messing around with price before the open button is there, or before the open time is there. If 8 o'clock isn't there and you find yourself itching to take a position, try stopping yourself. Or what you could say what they say. Don't even try to stop yourself. Go on run into the fire on your own. See what it's like to get burnt. And see how much you learn from it as well. That's one thing I can say. If you find yourself trying to take positions out of your time zone, try going a week taking positions that are invalid. When the week ends, analyze it, see how much it hurts, and see how more or less retarded or crazy you feel, or crazy you seeing yourself because I could avoid this happening had I just respect myself, respect my values, respect my trading system, respected my understanding of what it means to be a proper trader.